In the currency quadrant, taking a look at the June Japanese yen, which is down again today, down 3 of this week's 4 trading sessions, but it's really the down week, the weekly performance that was especially dismal. Today we're down about 0.75%, 76.44 or so is the approximate close. The low today, 76.36 half, was down almost 0.9%. We were barely up at all during the day in the yen. 77.12 and a half was the high. That was up a little bit more than 0.1%, but we're down 2.9% on the week for the Japanese yen. And this is the worst trading week for the yen since March of 2020. You all remember what was going on in March of 2020. That, of course, was the first notable week of the global pandemic. Now, we did have strong PMI data this week for Japan this past week. The Jinbun Bank PMI data, all stronger than expected. On Monday of this week, we got the manufacturing PMI, which was only 1/10 stronger than expectations. But then last night, we got the services PMI, which came out at 52.6 versus a last month reading of 50.7, so much stronger. And the composite PMI, which came out at 52.3 versus a last print of 51.1. And both of these, all the way back to the manufacturing, so all 3 of these were stronger than the markets expected them to be. So you thought you might get a little lift. We did get a little bit of a lift yesterday, but then it all got erased today and then some. And it's basically because you can't fight the strength in U.S. yields. Across the curve in the U.S., the 2-year up about 20 basis points this week, the 5-year about 26, the 10-year about 23, and the 30-year about 18 basis points. All of that increasing the yield differential between the dollar and Japanese yield products, as well as strengthening the U.S. dollar, which has an inverse relationship on the Japanese yen, helping to weaken it.